This is the briefing for Friday, July 19th. I want to start tonight with the intermarket divergences that have existed for at least the last week, potentially longer, and where we are in terms of the short-term development of the market. This is the 10th of July. This, by the way, is the spiders, the Qs, and the Russell, the IWM. Now, this is the spiders, and you can see this is the 10th, and it had not made a high as of that day. It still had 4 more days to go up to the 16th before it made its final high. This is the 10th in the NASDAQ, or the Qs, and you can see that was the day or the next day, the NASDAQ started to sell off, and you can see this move here. So basically, for the next 4 days in the NASDAQ or in the Qs, the market had started a sell-off, had tried to rally about 50%, and then started another significant move back to the downside. This is the 10th in the Russell. The Russell hadn't even broken out as of that point in time. So it was interesting to see how the NASDAQ began its decline, the spiders continued to move higher, and the Russell had not even broken out on the 10th. Now, after the 10th of July, you can see what's happened here is the NASDAQ has had a pretty significant decline along with the spiders. The interesting thing here was not only did we have intermarket divergences, but we had internal divergences as well. Now, you can see right here, this is the high, this is the 16th, the day the spiders or the S&P made a high. Breadth was fairly significant. It was up at 400. This is S&P breadth, so the S&P 500. So, and then you can see how it started to decline. We had a pretty good spike up to about the 350 area in S&P breadth, and then of course the decline started and breadth started to fall off and fell off pretty significantly in the spiders. Now, this is the NASDAQ, and this is what really befuddled me. As this move started down, look what was happening with breadth. Breadth was very, very positive, very, very strong, over 2,000 shares positive before we got this gap down, and then, of course, this moved back to the downside. Then we have, at the same point in time, we have the Russell moving higher. So just looking at these charts, you can see a down move, and a move to the upside. So as I've discussed in the daily briefings to subscribers, to me, trying to figure out what happened here is pretty significant in that it had to be that the higher weighted stocks within the S&P 500 and within the NASDAQ were being sold, and money was rolling into the mid caps, in other words, the Russell. And to prove that, or to back that up, I shouldn't say prove, but to back that hypothesis up, this is a chart of the Mag 7, Amazon, Google, Nvidia, and Tesla, and Microsoft, whatever those 7 are. Now, this happens to be the 8th. This is the 8th of July. This is the 10th of July, and you can see that on the 10th is when the sell-off started in the Mag 7. So you can see, and the sell-off has continued. So the theory that I've prepared basically says that the indices, there is money coming out of these indices going into the Russell, because that's what's fueling the Russell, the more speculative index. Now, it's going to be interesting because not only has the Russell started down, but it has not even caught up in terms of price development with the other 2 indices. So we never know how intermarket divergences are going to be reconciled, but they are always reconciled. So is the Russell correct in holding up this area, or is the NASDAQ and the S&Ps, are they correct in suggesting that we probably have more downside work to do before this is complete? So I just wanted to point that out. And I had not ever seen market breadth be as strong as it was on that little of a move higher and the beginning of this move to the downside. And you can see even right here, that breadth was even expanding at 2,155 shares in the NASDAQ as price barely moved anywhere. And then, of course, the next day we got the move to the downside. Now, this is the spiders on a daily basis. Now, you can see how volume is beginning to increase. We had at the high on the 16th in the spiders, we had 52-week highs minus 52-week lows at 872 shares. That was a level that we have to go back pretty far to see if it even this came close. This level came close, but not anywhere close to this. So this was a strong market internally going into the high on the 16th. And then all of a sudden, price began to collapse, and the internals started to follow to confirm what was happening within price. Now, today you can see we had a lower low, and we had a little bit more positive breadth. This is NYSE breadth. So there's a slight divergence between yesterday and today in terms of the internals, but the internals are still fairly weak, suggesting that this may be developing into something more higher in terms of degree of price development and in terms of degree of time. Now you can see this is the 550 area in the spiders. This is the upper extreme from this area of rotation here. So trading through that and closing below it was a pretty significant event today. This opens up the potential to trade down to the 540 level. That's the next level of support in the spiders. Now, I also want to point out this 550 level is important as resistance now. It was support, now it's resistance. So trading and closing back above that would suggest potentially that this may be in the process of completing, and we could see the potential for another rotation back to the upside. I was just very, very surprised to see this sell-off begin with the internals as strong as they were and continuing to strengthen. It really appeared what the internals were telling us that price was going to continue to move substantially higher after breaking out of this area of rotation. Now, in terms of the Qs, we're looking at the fact that they've traded through this 487 area, closed below it on Wednesday. Thursday extended that loss and extended the loss again in today's trading. Once again, you can see a little bit of divergence in breadth with the NASDAQ as well. Support comes in at the 470 area. Resistance is the 487 area. Those two areas are extremely important. Now, if the Qs were to break through 470, that would be pretty significant because that would open up a test of the 450 area, which would be the upper extreme of this area of rotation, which goes back potentially all the way back to January 19th of this year. So you can see we're approaching very important support levels that, if broken, would suggest the potential that we are in the process of a greater degree time and price counter trend rotation, or even potentially a trend change, which would surprise me if that is the case. But it's pretty clear that money is coming out of the NASDAQ and going into the Russell or going to the sidelines. But certainly there's no buying pressure, at least right now, that I can see. Now that can change, and it can change potentially on Monday. But what we'll have to watch for is the short-term support and resistance areas. But I'm really concerned about this 470 level right now, that if that's traded through, then we could be seeing an acceleration to the downside. Looking at the Russell, now the Russell is very interesting. You can see this was the 10th and it had not even moved yet. This was the 11th, which was, I believe it was last Friday maybe. And you can see the huge move. I mean, every day there was a gap up with follow through. That was pretty significant. Now, we did have on Wednesday, we did have a reversal candle, and then we had another reversal candle yesterday, and just a little bit of just rotation in today's trading. But trading through this this is the 219, 220 area. That was a pretty significant event on Thursday. That opened up the potential to trade all the way down to 212, which is a very important key reference area the upper extreme from this area of rotation. Now I want to change this to a weekly chart, if I can. Okay, there you go. So this is the Russell. This has been in rotation, not able to break out either side since June 17th of 2022. So over 2 years ago is when this rotational pattern started with the Russell, with the IWM. Now it is common. Now if I drew this trend line here, if I drew that right here at 200, you could see that very carefully now, and it is typical for, if this is the upper extreme, then it is typical for a market or a financial instrument, when it reaches an area of support or resistance like that, to pause and rotate around it. And that's what this is. This was a fairly long, this goes all the way back to December 15th of 2023. So this pause was pretty significant. Now, last week we had this huge breakout. I mean, this was pretty strong. I mean, look what happened with volume. Volume absolutely exploded in the Russell. But then we have this week this reversal candle. This candle is concerning. If by chance we trade below this week's low, which comes in at 214.30, so the 214 level, if we were to trade through that low and close below that, that's going to put that back in this area of rotation here. I should say this area of rotation here. And you can see I've marked support levels should that happen. The other side of this is, if this 220 level is broken, this was convictive selling this week. This was convictive selling. So if the sellers that sold this, if they don't step in and start buying much above 220, then, or if they do step in and start buying much above 220, then this is going to get retraced, and potentially we're going to be taking out this week's high, which comes in at the 226.64 level. Volume exploding nicely, but breadth was negative, but not extremely negative. So it was very interesting to see that the Russell, even though it had a down week this week, that the internals really did not weaken pretty substantially. And this is the daily basis. This is the rotation at the upper extreme of the weekly rotation that I was showing just a minute ago. Now, in terms of overbought and oversold, you can see this is the NYSE. It is neither overbought nor oversold. It's basically neutral, so this allows for it to trade lower on Monday or trade higher, so it really doesn't give us much of a help. But the NASDAQ, this is very interesting. Yesterday we reached a point of being extremely oversold, and in yesterday's briefing I talked about the fact to watch for some type of a bounce or some type of divergence that would suggest a pause, and that's pretty much what we got in today's trading. But this now, it is not extremely oversold, but it is oversold. But this still does not preclude the NASDAQ from having lower prices on Monday. So the key to watch out for on Monday is, if we trade through this consolidation, we trade through the low of today. This is the spiders, this is the Qs. We trade through that. That's going to then suggest that we're going to be breaking out once again, and we're going to have lower prices. But watch for a divergence in breadth. That's going to be the first clue that potentially the market is running out of steam. It's be exhausting itself, and we're going to see potentially some type of pause or rotation back to the upside. Now, watch the lows of today, and then watch breadth at the open on Monday, and give it an hour. In the first hour of trading to settle down and kind of work out all of the orders that are there at the open. Now the Russell a little bit different. You can see this area of rotation here, short term. So looking to be short below today's low would suggest then, as long as the other indices are following and breadth is confirming, that there's going to be another leg to the downside, and it may be that the Russell has some catching up to do. Now looking at this above 218. That would suggest then that the Russell potentially is going to go back up, and short-term resistance is going to come in right at the 222 level, right at the low of this area of rotation right through here. So watch that area very carefully. Watch the intermarket divergences. I keep an eye on this chart all through the day to see what's happening. One, in terms of the market following itself and not having divergences, or watching these divergences and seeing which one is the correct one, and then watching what happens with breadth as well. Now, I showed last week, I showed this is the percentage of stocks above the 50 and 200-day moving averages. And last Friday I talked about, or it was earlier in this week, I'm sorry, that we had this explosion of stocks trading above the 50 and 200-day moving averages. This is in the S&P 500. This is above the 200-day moving average in the S&P 500. So this is going to be very interesting. This is still, below trend. This broke out above trend, but you can see the turn down that we saw in today's trading. And this was the divergence, the internal divergence, that was just really uncanny to watch, because you saw this move, this decline in the stock percentage of stocks above their 50-day moving averages, but price continued to expand. And the same thing with the 200-day moving average. You can see price expanding and the percentage of stocks above the 200-day moving average just declining. Now, the NASDAQ was a little bit different. NASDAQ had a little bit bigger breakout above the 50-day moving average, and did break out above the 200-day moving average. And this was a little concerning also, mainly because this is this week's trading in the NASDAQ, or I should say in the Qs. And you can see that even though it was a down candle, we had a pretty significant move to the upside in the previous week, and not much of a move to the downside in this week's trading, which you can see was a pretty good candle to the downside. And in the Russell, you can see the breakout occurred, and it continued this week and continued above the 200-day moving average as well. So really, there is a lot of divergences between internals and price, and between the indices themselves, that are going to be very interesting to see how they're reconciled. So watch what happens, especially on Monday's open. Watch what happens in terms of price development. If it's lower than today's low, watch for a divergence in market breadth. If it is higher than today's low, then watch what happens with the internals. And because we could be just in the process of another counter trend rotation. I'm not predicting, and I'm not, in terms of my own analysis, I'm not necessarily thinking that we're going to see an immediate move back to the upside. I think a lot of damage has been done here. We've traded through some important intermediate term support levels, and I'm going to be watching pretty carefully short term what's happening, and being a little bit cautious in the coming week. I'll pick this back up on Monday for subscribers, and it should be a very, very interesting day. Have a great weekend.